Hello, my fellow silver stackers. Welcome back to Gold Rush Reporter, your go-to place for gold and silver analysis. Today, we're tackling a hot topic. Will silver hit $70 tonight? That's the question on everyone's mind, and by the end of this video, you'll have a clearer picture of what's possible and what's likely. Here's the claim right up front. Yes, silver reaching $70 per ounce tonight is feasible. It's not guaranteed, but based on recent market moves and volatility, the potential is real. Friday alone saw silver jump by $3 in a single day, reaching $67.50 per ounce, even after a short decline earlier. That's the kind of swing that can set the stage for a $70 move overnight, especially when Asian and London markets open. Now, what would the consequence be if silver actually hits $70? For investors and stackers, this would confirm that the current bull run is gaining serious momentum. Those holding silver long-term would see the value of their portfolios rise significantly, and it could attract new buyers who don't want to miss out. However, with rapid gains comes the risk of short-term pullbacks. A $3 overnight shift is exciting, but it also shows how unpredictable silver can be. Let's talk credibility. I've been monitoring silver prices every Sunday night, tracking the market closely across multiple global exchanges. My friends at Summit Metals, trusted in the precious metals community, have also noted this upward trend. They continue to recommend holding for the long term rather than trying to time every spike. Historically, this approach has preserved wealth, especially when markets are volatile. And we can see that volatility right now. Silver isn't staying flat. It's moving fast, reacting to global events, and the current bull run has seen both significant drops and quick rebounds. Now, to explain what's happening in simple terms, silver's price is influenced by several key factors. Overnight trading in Asia, particularly Shanghai, can create wild swings. Supply chain pressures, vault restocking, and large-scale purchases of 15-kilogram silver slabs in China are all contributing to a dynamic market. Meanwhile, gold has been steadily climbing, setting a benchmark for silver's potential. Add to that the shrinking gold-to-silver ratio, which currently sits at 64-65, and you can see why silver could surge to 70 or beyond in the near term. Here's the takeaway for today's part. Don't be surprised by volatility. Expect fluctuations, both up and down. Keep a close watch on the Asian market openings on Sunday night and Monday morning. And if you're holding silver, remember that short-term movements are normal, but the long-term value remains strong. Let's dig deeper into why silver could climb to $70 tonight. The claim is simple. Market momentum and historical volatility suggest that a breakout is possible in the next 24-48 hours. Silver has already smashed past $66 and $67 per ounce, and Friday's $3 overnight move shows that price swings of this magnitude are very much within reach. The Asian and London markets are particularly important here. They often set the tone for what happens next. The consequence of this momentum is clear. If silver continues this trajectory, short-term traders could see rapid gains, and long-term stackers may find their holdings appreciating faster than anticipated. But the flip side is also important. Every surge carries the risk of a temporary pullback. That means you might see silver drop 3 to 4% in a single day before bouncing back, as we've already witnessed multiple times in this bull run. Understanding this risk is critical before making any trade or purchase. Credibility matters when predicting moves like this. I've been tracking the market for years, and the patterns we're seeing now are familiar. Take Friday's move. Silver rose from $64 to $67.50 in hours. Historically, similar surges occurred during other major bull runs, 2011 being a prime example. Markets react strongly to global events, supply disruptions, and sudden investor interest. Currently, reports from Summit Metals indicate increased buying activity in Asia, particularly Shanghai, where silver slabs are being restocked in 15-kilogram units. This kind of demand can push prices higher very quickly. Now let me explain the mechanics behind these moves. First, supply and demand. Physical silver availability, especially in large markets like China, influences short-term spikes. When vaults restock or new shipments arrive, trading volume increases, which can accelerate price movements. Second, the gold to silver ratio. It has recently shrunk to 64.65, signaling that silver is undervalued relative to gold. Historically, a shrinking ratio often precedes price surges in silver. Third, investor behavior. When traders see rapid gains, it creates a self-reinforcing cycle. More buyers enter, pushing the price higher, sometimes very fast. Another factor is market sentiment. During high volatility, speculators and long-term holders react differently, and understanding that distinction is key. Short-term traders may try to ride the spikes, while long-term investors tend to hold, expecting the value to grow over months or years. This dynamic creates periods of extreme swings, like the ones we are seeing now. Even if silver retreats tonight, historical patterns show it often recovers quickly and may attempt another breakout. Finally, let's consider the historical context. During the Hunt brothers' attempt to corner silver in 1980, prices surged dramatically, reaching the equivalent of over $200 per ounce today when adjusted for inflation. In 2011, silver hit $49.50 per ounce, around $72.73 adjusted for inflation. These past events highlight silver's capacity for rapid gains, especially when combined with strong market interest and low supply availability. This is why I believe a move to $70 per ounce is not just possible, it's a realistic scenario. So here's what to watch tonight and early Monday. Asian market openings, especially Shanghai, for price jumps. Volume surges, which often precede rapid upward moves. Short-term pullbacks, which are normal and can signal the next rally. Let's focus on the claim. Silver has the potential to not only reach $70 tonight, but also set the stage for even higher levels in the near term. This isn't mere speculation. It's based on observable market trends and historical patterns. Friday's $3 overnight move demonstrates the volatility that silver can produce in a short span. And with Asian markets now active, particularly Shanghai, the next surge could happen in hours. The consequence of breaking $70 is significant. A price at this level would confirm that this bull run is intensifying, drawing attention from both individual stackers and institutional investors. The market could see heightened trading volumes, further amplifying price swings. Moreover, reaching $70 could act as a psychological milestone, encouraging momentum-driven buying, while creating opportunities for profit-taking and short-term corrections. Essentially, it sets up the stage for a wild ride, with both potential gains and risks. Credibility is key, so let's examine the data and news. Reports from Shanghai Gold Exchange indicate restocking of physical silver, with 15-kilogram silver slabs being actively distributed. This demonstrates real, tangible demand behind the numbers we see on charts. Additionally, historical moves like the 2011 highs, adjusted for inflation, show silver reaching near $72–73 per ounce, proving that high levels are achievable under strong market conditions. The gold to silver ratio, currently at 64.65, also suggests that silver is undervalued relative to gold, making it an attractive target for traders looking for growth potential. Now, let me explain why silver could surge beyond $70. There are several factors at play. Global market dynamics. As Asian markets open, volatility often increases due to large trades and arbitrage opportunities. Shanghai and Hong Kong trading can create rapid swings, which sometimes carry through to European and US markets. Supply constraints. Physical silver inventories are being replenished, but limited supply combined with strong demand can push prices upward quickly. Watching the flow of silver slabs in China gives us an early signal of price moves. Investor behavior. Momentum traders react to spikes, while long-term holders provide stability. When short-term speculators pile in, prices can jump fast, creating a chain reaction that reinforces upward trends. Historical precedent. Both the Hunt brothers' 1980 silver surge and the 2011 bull run highlight how quickly silver can reach new highs when demand exceeds supply. Even after sharp pullbacks, silver has historically rebounded, which makes a near-term target of $70 plausible. However, let's be realistic. While reaching $70 is feasible, temporary pullbacks are inevitable. A 3 to 4% decline in a single day isn't unusual. In fact, such fluctuations often precede stronger rallies, clearing out weaker positions and allowing the next wave of buyers to enter. This is a normal part of silver's market behavior during a bull run. To sum up this part, silver has both the momentum and historical backing to reach $70. Supply pressures, strong demand, market psychology, and historical patterns all point to the plausibility of this milestone. That said, traders must be aware of potential corrections. They're part of the market's natural rhythm. Now let's shift focus to an equally important topic: the risks that could prevent silver from hitting $70 tonight. Claim first. While a surge to $70 is feasible, market reversals and corrections are very real possibilities. The silver market is highly volatile, and short-term spikes can be followed by equally sharp declines. The consequence of ignoring these risks can be costly. Traders who chase sudden moves without proper caution may experience losses during pullbacks. For stackers, even if holding long-term, panic selling during a short-term correction could reduce potential gains. Understanding these dynamics is critical, not just for predicting price, but for protecting your wealth. Credibility matters. Let's look at recent examples. During Friday's trading, silver jumped $3 in one session, but also experienced a temporary drop before the rebound. Historically, during both the 2011 and 1980 bull runs, rapid surges were always followed by corrections. The Hunt brothers' market movements caused silver to spike dramatically, but subsequent reversals reminded investors of the inherent risk. My observations from monitoring the Shanghai Gold Exchange and global silver flows confirm that even strong upward momentum is rarely linear. Now, let me explain what to watch to navigate these risks effectively. Short-term pullbacks. Expect declines of 3 to 4% in a single session. These aren't signs of a failing market. They're normal in high volatility periods. For instance, Friday's surge from $64 to $60.50 came after an initial dip, showing how corrections can quickly reverse. Market timing and global sessions. Most dramatic swings happen during Asian market hours. Shanghai and Hong Kong are particularly active. A surge can start overnight and either continue into European and US sessions or face resistance, leading to reversals. Knowing when markets open and close can help you anticipate these moves. Investor psychology. Momentum traders can accelerate gains, but they also sell quickly during uncertainty. Watch for sudden spikes in volume, followed by hesitations in price movement. These often signal short-term resistance or a potential reversal. Supply and distribution. Limited physical silver, especially in large vaults in China, can create price volatility. While restocking occurs, any slowdown in supply or sudden demand spike can either propel prices or trigger short-term retracements. Despite these risks, the explanation for optimism remains strong. Silver's bull run is underpinned by structural factors: limited supply, increasing global demand, and inflation hedging. Even if prices retreat tonight, Historical patterns show that rebounds are likely. The market often tests key levels like $67, $68 before attempting to break $70. Those who understand this can plan their entry and exit strategies intelligently rather than reacting emotionally to short-term swings. Another key factor is the gold to silver ratio, currently at 64.65. When this ratio is shrinking, silver tends to outperform gold in short bursts. It's a signal that momentum could continue, but the market could still pause temporarily as it digests gains. In short, silver reaching $70 tonight is plausible, but stackers and traders must respect volatility. Recognize that pullbacks are normal, track key market sessions, and watch for supply and demand signals. This awareness allows you to participate in gains while minimizing exposure to sudden drops. Now that we've covered short-term moves and risks, let's focus on the long-term perspective. Claim: despite short-term volatility, silver's fundamentals remain strong, supporting the ongoing bull run and making 70 and beyond a real possibility in the near future. The consequence of understanding this is critical. Investors and stackers who grasp silver's enduring value are better positioned to hold through market swings, avoiding panic selling during temporary dips. Holding silver long-term preserves wealth, especially during periods of economic uncertainty or inflationary pressure. Even if prices fluctuate day to day, the overall trajectory points upward. Credibility is key here. Historically, silver has proven to be a reliable store of value. During the Hunt Brothers surge in 1980, silver prices skyrocketed to record highs before correcting sharply. But those who held through the volatility benefited from wealth preservation in real terms. In 2011, silver reached $49.50 per ounce, which, adjusted for inflation, is around $72, $73 per ounce. These examples show that market corrections are natural, but silver's underlying value remains intact. Now, let me explain why the fundamentals are strong today. Global demand. Silver continues to be in high demand, not only as an investment, but also in industrial applications, including electronics, solar panels, and medical devices. This dual demand, both investment and industrial, creates structural support for higher prices. Limited supply. Physical silver remains finite. Restocking in major markets like China is ongoing, but supply constraints continue to create upward pressure on price, particularly during periods of increased investor interest. Inflation. Hedge. With global inflation concerns, investors increasingly turn to silver as a safe haven. Its long history as a store of wealth outside traditional currencies makes it attractive, particularly during volatile economic times. Historical precedent. Past bull runs, even with corrections, demonstrate silver's ability to reach and surpass new highs. While the market experienced setbacks after 2011, the overall trend over decades shows upward growth in real value, confirming silver's durability as an investment. Psychological and market momentum. Market sentiment plays a big role. As silver approaches key levels like $70, investor enthusiasm grows. Momentum traders push the price higher, while long-term holders provide a stabilizing force. This combination often results in strong, sustained bull runs. Here's a practical takeaway. Don't get caught up in daily fluctuations. A pullback to $65, $66 is not a crash. It's an opportunity for long-term investors. Historically, such corrections precede stronger rallies, allowing those who hold to benefit from continued upward momentum. Additionally, the holiday season may amplify activity. As we approach Christmas and year-end, trading volumes often increase, adding fuel to potential rallies. Friday's $3 move and the overnight shifts demonstrate just how quickly silver can move when markets are active. If momentum continues, hitting $70 before the end of the year, or shortly after, is well within the realm of possibility. Finally, keep in mind that silver's value is about more than just price. It represents a store of wealth outside the traditional financial system. Even if temporary declines occur, the long-term story remains intact. Scarcity, industrial demand, and historical precedent all support ongoing growth. Let's bring everything together. Claim: silver's journey to $70 per ounce tonight is plausible, and the bull run has the potential to continue into the near future. The combination of momentum, historical precedent, and strong fundamentals makes this scenario realistic, even if short-term pullbacks occur. The consequence of this outlook is clear for stackers and investors. Staying informed and disciplined is critical. If silver reaches $70 tonight or in the coming days, it validates the ongoing bull run and creates opportunities for strategic buying or portfolio adjustments. Conversely, ignoring volatility or overreacting to temporary dips could lead to missed gains. Understanding the dynamics allows you to participate intelligently without emotional trading. Credibility comes from observing patterns, global market activity, and historical comparisons. Friday's $3 overnight move, coupled with Shanghai and Hong Kong market dynamics, shows that large swings are possible within hours. Reports from Summit Metals and the Shanghai Gold Exchange confirm that restocking and high demand are supporting these price levels. Historical bull runs, 1980-2011, demonstrate that silver can surge dramatically, correct, and then continue climbing. This context gives confidence that current trends are grounded in real-world factors, not just speculation. Now let me explain what this means for the short-term and long-term silver outlook. Short-term, watch the Asian and London markets closely. Price movements overnight can set the tone for early Monday trading. Expect volatility, including temporary pullbacks, but also anticipate rapid upward swings. $70 silver is within reach, and momentum could even push higher if global demand and trading activity remain strong. Medium term, the holiday season often brings increased trading volumes. Combined with ongoing demand and limited supply, this could sustain silver's upward trajectory. Short-term dips will likely be absorbed quickly by long-term holders and momentum traders, maintaining the bull run's overall strength. Long-term. Fundamentally, silver remains a durable store of wealth. Industrial demand, scarcity, and historical performance reinforce its value outside the traditional financial system. Even if prices temporarily fall to $40–45 per ounce as a new floor, stackers will still benefit from the long-term upward trend. Over the next months and years, silver's fundamentals suggest continued growth and resilience, making it an essential part of any precious metals strategy. Key takeaways. Volatility is normal. Expect ups and downs in short periods. Momentum can drive rapid gains, but short-term corrections are part of the process. Historical precedent supports optimism, but managing risk remains essential. Long-term fundamentals are strong, with silver acting as both a store of value and an investment hedge. Finally, for my fellow stackers, keep a steady hand, watch key market indicators, and don't let short-term movements dictate your strategy. Silver's bull run is far from over, and the next milestone could be 70 or higher. Thank you for watching Gold Rush Reporter. I appreciate every like, comment, share, and subscription. It helps me continue delivering honest, analytical insights for gold and silver markets. Whether you're tuning in Sunday, Monday, or even later this week, remember, stay informed, hold wisely, and observe the market with a critical eye. And before I sign off, Merry Christmas to all of you. I hope this season finds you in good health and good spirits, while your silver stacks grow steadily along with the market.